Welcome to Am I Catching a Falling Knife? I'm your host, Dave, and on today's show, we're diving deep into a company that's seen a bit of a tumble recently. We're talking about Duolingo, ticker symbol DUOL. This stock has slid nearly 10% in just the last 10 days, and that's got a lot of people wondering, is this a prime opportunity, or is it a knife you absolutely want to avoid trying to catch? Let's break it down. All right, let's dive into Duolingo, ticker DUOL. Over the past 10 days, this stock has seen a pretty significant drop, down about 9.55%. That's certainly enough to make you wonder, are we catching a falling knife here? The dominant market narrative right now, the one causing all this churn, centers on growing concern over a slowdown in user engagement and daily active user, or DAU growth. This isn't just chatter, it's led to recent analyst price target reductions, and it's especially relevant because their Q2 2025 earnings report is right around the corner on August 6th. So, what exactly is Duolingo? Well, it's a global leader in mobile learning, primarily known for its flagship language learning app. They've built their platform on bite-sized lessons and gamification, making learning fun and accessible. They also offer the Duolingo English test, which is accepted by thousands of education programs worldwide. Financially, their business is heavily reliant on subscriptions, which make up about 79% of their revenue, with the rest coming from advertising and the English test. Now, how does this slowdown in user engagement narrative translate into a financial impact? Let's break down the math a bit. Because user engagement is critical for both subscription and advertising revenue, a slowdown here directly hits their top line. We've estimated that this could lead to approximately a 3.0% shortfall in their expected Q2 2025 total revenue. Now, here's where operating leverage comes into play. Duolingo boasts a strong gross margin of 73%. So, a 3.0% revenue shortfall translates directly to about a 2.19% reduction in gross profit dollars. But since their operating expenses are relatively fixed in the short term, that reduction in gross profit gets amplified as it flows down to net earnings. We're looking at an estimated net income margin of about 12%. When you crunch the numbers, that 3% revenue hit is projected to result in roughly an 18.24% negative impact on their Q2 2025 quarterly earnings. We're talking about a potential 18% hit to their quarterly profit, which is a material impact, folks. While there's always uncertainty with these projections, especially without specific quantitative data on the slowdown's magnitude, the fact that analysts are already cutting price targets confirms the market sees a real issue here. So, with this potential earnings hit in mind, what's Duolingo actually worth? To figure out what this stock is really worth, I'm looking at it from two angles, using data I pulled from finviz.com. First, a discounted cash flow, or DCF model. This model, which projects future cash flows back to today's value, uses assumptions like a long-term earnings growth rate of about 50.3% and a discount rate of 9.5%. Under a base case, without the narrative's negative impact, our DCF gives us a value of around $171. But when we apply that 18% earnings hit from our narrative analysis, that DCF value drops significantly to about $135.09. The second method is a bit simpler, a PEG-based valuation. PEG stands for price earnings to growth, and it's a quick way to see if a stock's PE ratio is justified by its earnings growth. Based on Duolingo's expected growth, this method gives us a fair value of about $150.78. When you compare these values to Duolingo's current price of around $340.49, it really highlights the potential downside that the market might still be pricing in, especially if this user engagement slowdown is worse than anticipated. So, given these valuations and the current market concerns, I've got a few custom buy levels in mind if you're looking to catch this knife. $165, $150, and for a really aggressive entry, $135. So, to wrap things up on Duolingo, remember folks, this is not financial advice. My analysis is here to help you understand the dynamics, but you absolutely need to do your own thorough research before making any investment decisions. Markets are complex, and every investment carries risk. That's all for today's episode of Am I Catching a Falling Knife? Thanks for tuning in, and I'll catch you next time.